Hello, trading is closed on November 17th, 2017. I'm still trying to shake off my cold, and I don't know if I'll have any videos next week, but I did have some time today to look at things. First of all, let's go over yesterday's calls. We said unless we gapped over this high, lower prices should print, which they did. Our target for the lower prices was the origin of the left stilt, which is this line here. We said the pattern would tend to have an early low and a late high, has a tendency to rally throughout the day. We got the early low, we got the late high, the times are perfect. Certainly wasn't a rally, and typically when this doesn't rally throughout the day, it leads to further weakness. During the day, MEJT said ultimately higher prices would print. Later it said ultimately lower prices would print. We got the lower ones, we haven't got the upper one, that's the target. Ultimate targets usually print pretty soon, but there's no time limit. And if I'm right about the high of this leg being in, I really want to see a failed target which confirms that the high's in. MEJT typically leaves a failed target at a major change in trend. Now, I can make a case somewhat for there being mixed signals because after dropping all day we couldn't undercut this low at the close. So if we gap up and take out the high, all this negativity stuff from the pattern goes away. However, usually the first test of the origin of the left stilt holds, and that means usually, more often than not, the next move is down. Now this is the count I still want to see work. I don't always get everything that I want. But if it is the count, this was the high of the leg. It hasn't been invalidated yet. If it's to remain valid, I need some explanation for what's going on since then. This was the count we had yesterday. We had a beautiful ABC with C equal to A. That would be brown A. This could be an ABC for brown B, and we could be starting brown C down, but this also could be another purple A. This could be a purple B with a purple C coming up. You can make a case for either scenario. However, beautiful as this ABC is, I think there's a more pleasing count. That one doesn't break any rules, but this one has a lot of Fibonacci stuff to recommend it. Let's still call this A. Then we're going to have an A, B, C for B. B is a Fibonacci retracement of A, which doesn't have to happen, but it adds credence to the count. It's right there. It's perfect. You've got brown C, a perfect Fibonacci ratio of brown A. Showing that the waves are quite related. And all these other things I've outlined all work too. So if this count with a lot of Fibonacci stuff to recommend it is true, then the weakness of the pattern which usually closes near the high and instead closes near the low, the initial challenge of the origin of the left stilt, the failure after this huge rally to hold on to any of these highs at today's close, all these things speak well of the argument that we're going to move down sharply at Monday's open and be in wave purple C down. Of course, if I'm wrong, as always, it's obvious before the open because we'll gap up smartly. I think it's pretty negative action. I think it negates a lot of the positivity of yesterday's action by not holding over prior highs. Now, I do think Monday's pattern will feature an early high, but it doesn't preclude gapping down first. Tuesday's pattern, I believe, will have an early low. So, if I'm right about the high being in, we should start down pretty early Monday. And I think the chances I'm right are reasonably good, but it's not a lock because if we gap up, there is another interpretation out there. And that's today's call.